Hello everyone, I'm Ankit and you're watching StudyIQ IS. And in our today's video, we are going to understand why is government planning to abolish Equalisation Levy, which in other words is also popularly known as Google tax. Now this news is in context of an article which appeared in the newspaper highlighting that in its discussions with the US government, the Indian government has actually proposed to abolish the Equalisation Levy, which is levies on online advertisement. Now government has said this will be a part of amendment bill to the finance bill which was introduced during the time of budget, and experts have deemed this move as a signal from India to remove some of the taxes which are levied on American businesses, because we understand America has presence of big digital companies like Google, Apple, Amazon, etc., and they sell many goods and services through online medium to Indian consumers. Right now in terms of taxation, there are otherwise two kinds of taxation that were levied on these kind of online goods and services. For example, online e-commerce companies like Amazon, whenever they were selling goods and services directly to Indian consumers, they were levied an equalization levy of about 2% of revenue. And similarly, the equalization levy for selling of ads, for example like Google, it was levied a equalization levy of 6%. Now last year government abolished the equalization levy on the e-commerce transactions, and this year government is highlighting that it will also abolish the equalization levy on online advertisement. So let us try to understand how the taxation policy in India is determined. Now, before 2016, India's taxation policy was based on the economic and physical presence of companies in India, and this was according to the provisions of Income Tax Act 1961. And according to this act, only companies that had physical presence in India, they will be required to pay income tax on any goods and services they are selling it to Indian consumers. And this is because this acts want companies to establish their businesses, and this was before the online and advent of the information technology, that companies needed to require a physical presence before they were able to sell goods and services. But all of this changed with the onset of IT and particularly internet, because technically now once you have an e-commerce website, you can sell goods and services to any part of the globe. Similarly, companies like Google, who make the most of their revenue through online advertisement, they can sell online advertisement to any company which is based in India directly without having the need to establish a physical presence in India. So this is what the advent of information technology has done to the global businesses. So for example, Google Corporation, it is a company which is registered in US and it has a permanent resident status in US. So they can make a source of revenue by selling online advertisement to a company or to a business based in India, and they will not be required to pay income tax in India because they do not have a physical presence in India. As Income Tax Act of 1961, it is not applicable on them because they are a company not resident in India. So to tax such companies which were outside the ambit of taxation of Indian government levied an equalization levy on these kind of companies, because government felt that it was only able to tax companies who had physical presence in India, and as these companies were selling goods and services to Indian people but not having economic and physical presence in India, so they were not to be taxed in India. So let us understand how this equalization levy works. So for example, there is a company called Google, which is a resident of a country called as US. So this company called Google can directly sell online advertisement services to a business based in India, that is an XYZ business. So this business which is based in India, it is taking a service from Google company called as online advertisement services. So for that, Google will be required to pay equalization levy, and it will not be required to pay income taxes on this kind of online services or delivery of online goods and services. But what if Google establishes a company called B in India, which is a wholly owned subsidiary of company called Google located in US, but this company is registered and functions physically from India. So in that case, if this company B sells online services to any business XYZ in India, this company will be required to pay income tax, and this company will not be required to pay equalization levy. Understood? So levy of equalization levy or levy of income tax, it solely depends whether or not this company Google has presence in India or not. If it does not have presence in India, they will be required to pay equalization levy and not income tax. If they have a presence in India through a subsidiary, then they will have to pay income tax and not equalization levy. But how this equalization levy works, let us try to understand this. Now, equalization levy, it is not levied under the income tax law, that is Income Tax Act of 1961. Rather, it is an independent levy which was introduced through Finance Act of 2016. Now, there are various kind of goods and services which are sold, and there are different types of equalization levy which is applicable. For example, sale of digital services like online advertisement, it was notified by the government, and government said companies will have to pay 6% of equalization levy. Similarly, if an e-commerce company is selling goods without having an economic presence in India to any consumer based in India, they will be required to pay equalization levy of 2% on their revenue. So this is the legal status of equalization levy. So how this equalization levy works, let us try to revise it again. So for example, if there is an XYZ educational institute in India and it wants to advertise to people living in India that this is the best college that there is, irrespective of not the presence of IITs and IIMs in India. So if this XYZ company wants to market or it wants to advertise itself as the best college in India, it wants to give online advertisement. So for that, it asks the company called Google to advertise on an online medium that XYZ is the best college of India. And for this services, the Google is demanding a payment of say rupees 100. So this is the total revenue that the Google is making from selling of online advertisement services to the company called XYZ. So on this 100 rupees revenue, the equalization levy will be 6%. So this XYZ company, before paying rupees 100 to the Google, it will deduct 6% of rupees 100, that is rupees 6. It will submit it to the government as equalization levy, and rest 94 rupees will be paid to the company called as Google for giving this service called online advertisement. Similarly, if you want to buy a watch from e-commerce website, and if Amazon India does not have the watch, what option do you have? That you can get it from an Amazon website in US. But as Amazon US entity does not have a physical presence in India, so you will be required to import this item from US through the Amazon US based website which is not registered in India, and for that, for example, you are required to pay 100 rupees, right? So here the equalization levy becomes 2%. As I told you, there is a 2% equalization levy on the online based e-commerce based website, so that the company or the user will pay Amazon with 98 rupees and it will deposit rupees 2 to the government of India as a part of equalization levy. So this is how equalization levy works, that the equalization levy is computed not on profit of the company but the revenue of the company that it is generating through its online sale of goods and services in India. So to revise, equalization levy is a direct tax which is levied as per the provisions of Finance Bill, not Income Tax Act, and it is levied not on profit as against other taxes, rather it is levied on the total revenue that the company is making. And there is a qualification that only if a company is making revenues for more than 1 lakh, then only they will be required to pay equalization levy in India. And this is because for India or Indian government for that matter, it is quite difficult for them to estimate what kind of profits Amazon US or Google US is making out of their businesses in India. So to make things easier, they had implemented this equalization levy on the revenue of the company, not on the profit of the company that it is making from its Indian sale of goods and services. So this is how equalization levy works. But why was it implemented in the first place? Because we understood that companies who did not have a physical presence in India, they did not require to pay any kind of taxes in India, and government feel that it was wrong on their part not to tax these kind of online sale of goods and services. So to compensate their loss of revenue in this case, they implied a equalization levy. But now this is a cause of concern for American companies, that their overall tax burden increases, that earlier they were not required to pay taxes in India, but now they have to pay taxes on their revenue. So they complained it to the US administration, and therefore to alleviate the concerns of US administration, Indian government has highlighted that we will make it easier for online companies. They are not required to pay equalization levy anymore. And on a broader perspective, this also requires the need for implementation of global minimum taxation rate, as there is a discussion going on around with the members of OECD as well as members of G20 group of nations, that there is a need to implement a global minimum tax, that such companies who do not have a physical presence, they usually get away by not paying any kind of taxes. So for that, they need to pay a global minimum taxation rate of about 15% in an economy, and other economies can levy any kind of a tax over and above these global minimum taxation rate. So this is on a broader scale. This is how this kind of an equalization levy, also known as Google tax, works. Now let's see if you can solve this PYQ of 2018. As you can see, this PYQ actually appeared on the equalization tax of 6% on online advertisement. What is the correct answer of this PYQ? Please let me know in the comments. I am waiting for your replies, and also for more such informative videos, do not forget to hit the subscribe button and tune into our channel for more such updates.